Hello everyone, this is David Blair, the Crosshairs Trader. In this video I want to share with you a very popular strategy that I've developed and I'm often asked about, and that is the there it was-er strategy. And the there it was-er strategy basically trades exhaustions of trends with reversals. And in trading exhaustions of trends with reversals, you have to understand healthy trending markets and non-healthy trending markets. Let me give you an example. In this illustration here, in a restive and healthy short and long-term trending market, we have multiple pullbacks in the trend. In other words, we'll have a longer-term trend with nice pullbacks along the longer-term trend. Within the shorter-term trend, we will have again multiple pullbacks, healthy pullbacks within the longer term trend. Now, in my Crosshairs trading workspace in the TradeStation platform, I have developed what's called itches and crosshairs to determine trending trades in a nice healthy market. These are in the crosshairs and crosshairs trades, and they are both bullish and bearish indications of trades in a trending market. However, when a market gets extended, and when I say extended, I mean instead of having in the shorter term and longer term trends, we do not have many pullbacks and there's not much rest. There is what is developed, what develops is what's called a there it was-er and even false breakouts. Many times you'll see in the market a very popular trading strategy is to trade breakouts in trends. However, oftentimes those breakouts will fail and fail miserably, and most oftentimes that is because the breakout occurs when the trend previous to that breakout has not been a good, healthy, restive trend. So with the there it was-er, instead of the shorter term pullbacks in the shorter term trend, there are very few pullbacks. Also in the longer term trend, there are very few pullbacks. And then when you have a combination of a shorter term trend and a longer term trend not having a pullback, you can really have a much deeper correction. And that's what happens. You'll have trends that do not pull back adequately enough with healthy rest in the price action. When that happens, what you'll see is you'll see the price action correct instead of pull back and give back a lot of the gains back usually to where the rest should have taken place and did not. You'll have the false breakouts return back to where the rest should have taken place and did not, both on the shorter term and the longer term trends. So extended and exhaustive short and long term trends with few pullbacks reverse sharply and return to where rest was needed and not taken. And these also often lead to reversals. So in the charts that we're going to look at, you'll see where trends have been extended with little rest, and then when that trend is broken, you'll see in our TradeStation workspace where there will be there it was-er signals fire, both long and short, and you will see false breakout signals fire, both long and short. Now, of course, not all of these will work, and when we go through the charts, you'll see several of those that will work and work nicely, and there will be those that do not. And of course, that's why we have loss lines and manage our trades. But these are good high possibility trades when it's time for a reversal and time for rest, and these are high probability trades when there has been good rest in the market and good rest in stocks, and we have these nice low volatility pullbacks and continue the move. So in this video we're going to look at the there it was-ers and the false breakouts and see where the there it was-ers and the false breakouts could give you a high possibility trading edge. Now, I have been asked, why do I call it there it was-ers? Well, oftentimes amateur traders will jump in on a move after there's already been an extended move, saying, there it is. There is the continuation of the previous trend, or there is a continuation of the previous momentum. It's continuing to break out. I've got to jump on this fast moving train. However, what we do is we call it a there it was-er. No, it's not a there it is. It's not a trade to get into now. The most likely price action will be in the opposite direction. Therefore, there it was. All right, let's take a look at both bullish and bearish there it wasers and false breakouts. All right, let's begin with some bullish there it wasers, and in our charting software in the TradeStation platform, my indicators, the bullish there it wasers are green, and the bearish there it wasers will be red. Now notice, based on our previous discussion, where we determined that there are shorter term and longer term trends, you'll see the shorter term trends that have been extended and exhaustive will have red dots. On the daily chart, you can see the darker red dots here on, but then I'll also have the red dots on the weekly chart, and you'll be able to see those and distinguish those on the daily chart. They are the lighter color red dots, and this gives an indication that the weekly chart is also got an exhaustive extended move. The green dots are for the longer term trends that need to rest, and those green dots again will show up on the daily chart as lighter color green dots, and on the daily chart the daily dots will be the dark color, and you'll see those here as we go through our examples of trade. Now, I also teach crosshairs traders, when we're trading there it wasers, that we also look for major support and resistance areas on both the daily and the weekly chart. So you'll be able to see those here. Trend lines are green for me. I've drawn these here. The there it waser signals are automatically fired in the TradeStation workspace. Downtrend lines are red, and again I've drawn these for illustrative purposes, and support lines are green and resistance lines are red. So when we look at CAM, you can see there was a downtrend line. It was exhaustive, red dots both on the daily and the weekly chart. Therefore, this downtrend line was then broken, pulled back, there it waser signal here, and then another there it waser signal to indicate again a reversal there it waser trade, CAM. How about VRTX? VRTX, again, we look at both daily and weekly charts. You can see in this case VRTX had a trend down on the daily chart, had a high candle count, and you'll notice that the red and the green combination here means that the shorter term trend and the longer term trend were exhaustive at the same time. And then we found a support line at the gap fill on the weekly chart at the same time that we had the reversal for VRTX, and then we've got a there it waser signal. All right, let's take a look at WLT. WLT, many times in a stock you'll have not a sharp reversal but a long consolidation, and then the beginnings of a possible reversal after that consolidation. You can see that on WLT weekly chart down. We had a high candle count. There it waser here, red dots, and then the longer term green dots, and you can see the support line on this daily chart. You see the red dots here from the weekly chart. So we had a bounce, a pullback to find a support area, and then there it was fired, and then the dots actually fired on the upside. And again, these are based on extended moves on the shorter term and longer term trends. Let's take a look at SINA. SINA, again, let's stick with our pattern of understanding how these work. Downtrend, shorter term dots worked off. Then you had green dots, green and red dots. Green dots stayed on. Longer term trend was exhaustive, needed to rest. We had a sharp reversal, pullback, another there it was or signal, uptrend line, and you can see on the weekly chart where this happened with a longer term support line on the weekly chart. So we had a combination weekly and daily, giving us a good possibility for a reversal and a there it was or signal fired. How about NRG? NRG, and as I mentioned earlier, we're going to see some of these that don't work, some that do. They don't all work, but here's the idea. NRG weekly had a high candle count. There it was her. Red dots for the shorter term trend, and then a longer term trend dots. And you can see that on the weekly. See the lighter colored green dots here. Broken trend line there it was. Did not last very long on the red dots. Back up, downtrend line, green dots. There it was. Held a support level. First one didn't do anything. Second one didn't do anything. Held the support level on that weekly chart. And then the third one had a nice long reversal, actually started then to give the high candle count on the opposite side. But when we have really long extended moves where these dots stay on the charts for a very extended period of time, and in crosshairs trading we talk about these, you're usually going to have a sharper reversal of that price, both long and short. EOG. EOG, let's take a look at EOG here. EOG had, again, red dot, shorter term trend, high candle count on the shorter term trend. And I call it high candle count because the candles have gone in a direction for too long, based on what we consider too long and exhaustive for the shorter term and the longer term trend. You can see the downtrend line was broken. High candle count, green dots on the daily and the red dots on the weekly. And then you see the downtrend lines broken. And we have there it was, our signals. And you can see, I'm jumping the gun a little bit here. We haven't got to the bearish ones yet, but you can see where there it was, our signal actually fired with the high candle count here on EOG on the weekly as well. And if you will notice, when it fired on the weekly, there was a resistance line. So both bullish and bearish, there it was, our signals on EOG. How about HES, HES? A few there it was, our signals here that did nothing, but a downtrend line continued to go down. High candle count from the weekly, red dots, green dots on the daily, led to a reversal of trend. There it was at a support level on the weekly chart. ALTR, again, downtrend line, high candle count dots, green dots for the longer term trend. The shorter term trend had worked off, pulled back down to the higher candle count. Green dots at a great support level on the weekly chart. Gave us a nice, there it was, our signal. Bullish, there it was, our signal. How about ANR? Same thing. Nice downtrend line. High candle count dots, red dots, and green dots started to form, and you can see the green and the red combination here lets you know that the shorter and longer term trends were exhaustive. Found a support level on the weekly. There it was, our signal fired, gave us a nice trade on ANR. CA signal, Downtrend line, high candle count, both green and red. Short and longer term trends were exhaustive. You can see also the red dots from the weekly chart showing up here on the daily chart at a support level, and a nice reversal of trend. CTXS downtrend line, exhaustive, both red and green dots at a nice support level. There it was, or signals, reversal of trend. DECK, nice, there it was here again. Couple of them that failed. High candle count on the weekly, set up a nice support level, and then a nice one that worked here on a reversal on deck. DLR had a nice downtrend, both red and green, short and longer term trends were exhaustive, developed a nice support level, then a reversal of trend. Now it's actually firing a high candle count in the reverse direction, and you can see here on the weekly, high candle count combination, nice reversal on DLR. Now let's take a look at some bearish. There it was. There's now that we've looked at the bullish. All right, let's take a look at Google. First of our bearish, there it was. Google had a high candle count, red dot, shorter term trend on the weekly chart. You can see that on the daily chart here. The lighter color red dots, we had the green dots, and as I mentioned previously, the longer these dots go without rest, the sharper the reversal will be. And oftentimes what will happen is the reversal will revert back to where the dots started. And you can see that here with Google. But we had our trend line up, reversal of the trend line, nice resistance level, and there it was, our signals. How about IBB? IBB, again, long, exhaustive move on both the shorter term and longer term trend lines, established a resistance level, and you can see on the daily the green and the red dots together lets you know that both the shorter and longer term trend lines on the weekly were exhaustive. Here you can see where one did not work. Did not break the trend line though. We continue up, and then we started breaking the trend line with this. There it was, and had a nice sharp reversal move. Notice where the price went back to. We went back to where the dot started, and you can see that here on the weekly chart too, because it was such a long extended move, the price actually went back down to where those dots started. These also work on ETFs. This is the diamonds. Nice long trend line, high candle count on the weekly chart. Shorter term had a nice reversal move. There it was, our signals, reversal of trend. Also works on, for instance, the futures. At the same time as the diamonds, we had an uptrend line, high candle count on red count on the weekly chart, and you can see that again on the daily, and then we had a nice reversal of trend. How about GDX? GDX had a nice uptrend here. High candle count combination. Reversals started giving us, there it was, our signals, resistance level on the weekly chart. Here was a green one, as I said earlier, they don't all work. For a reversal, this one did not work. DTV, again, our combination of weekly exhaustion, daily exhaustion, reversal of trend. There it was, our signal. Amazon, very popular stock to trade. High candle count, both red and green, shorter and longer term trends. There it was, our signal, and reversal. HOLX. High candle count, trend, dots on both the daily and the weekly at a nice resistance level, and we're going to see this level here again in a moment when I go back to the left, but nice, there it was, our signal. Now when we go back, you can also see from this previous area where there was a trend, multiple high candle count dots on both the daily and the weekly, which means you're going to have a much sharper reversal, and you can see that we did so on the weekly chart, had a much sharper reversal of trend, and actually broke a support level and continued down. How about Apple? Another very popular stock. High candle count on both the daily and the weekly chart, and you can see that again superimposed here on the daily chart. Trend line up. When it's we have the combination weekly and daily extended both red and green, you're usually going to have a very sharp reversal back to where the dots started, and you can see that with Apple here where we went back to where those dots started on the weekly chart, and that's where we actually are today as of this recording. How about AKRX? A couple more here. There it was, our high candle count, both combination red and green, shorter and longer term, very extended here. Therefore you're going to have a sharp move back down to where those dots started usually, and you can see that right here. Resistance on the weekly. One more. How about GE? Popular stock here. With GE, the trend line, uptrend line, was broken. Resistance level with high candle count dots, red dots on the weekly chart, and then we had a break of that trend line and a nice reversal on GE. False breakouts fire both to the downside and to the upside. Again, those that are bullish are green, and those that are bearish are red. Again, notice what's going on here. We've got a downtrend line. This is OIH. Downtrend line, looking for a continuation of that breakdown of trend. However, it's got a high candle count dot at a previous support level. It fools those who believe that these breakdowns and breakouts have to work. It actually reverses and gives us a false breakout signal, breakout to the downside, and reverses. You can also see it again going on right now. Trend line down. Traders believe these trends should continue to work. However, we found a support level on that daily chart, several points that it's hit. Instead of breaking down, it actually reverses and heads higher. How about CMI? CMI again, looking for a continuation of the downtrend. We had a nice pullback off these dots, begins to break down again. However, there's a support level. We break the downtrend line at the support level also here on the weekly chart, and we begin reversing, now actually firing a false breakout here that is not working again as of right now. And again, they all do not work. False breakout on A. You can see November, July, August, November, reversal here, beginning of a downtrend line, finds that support area. You can also see that support area here on the weekly chart. False breakout, comes back, tests that low, and continues higher. AAP. AAP support level, downtrend line, breaks that level and heads higher. MOS. MOS, downtrend line, tries to break down here Instead, it fires a couple of false breakout signals and heads higher, support line on the weekly chart. And then SLB, again downtrend line, false breakout, moves a little bit up but then comes back down, tests those lows again and gives us another false breakout to the upside, a bullish false breakout, and you can see the support lines here on the weekly chart. Let's take a look at some bearish ones. CERN is actually firing one right now. On the weekly chart, you can see the resistance. It attempts to break out, then breaks back down. Again, what we're doing with there it wasers and false breakout is we're taking advantage of those who believe that trends should always work, who believe that all breakouts should work, and they do not know how to trade the reversal and be contrarian. And that's what we're doing here. We're taking advantage of those who do not know how to trade those types of reversals. ASNA, a lot of times you'll have the high candle count dots on the breakout. You can see the resistance on the weekly chart, and we begin reversing with the false breakout on ASNA. LNG, false breakout, a trend, we break out in this area, false breakout, and we start reversing, and you can actually see the high candle count dot here on the weekly chart as well, and a break of the uptrend on the weekly chart also at the same time. MCK had an up move, attempted to break out again, breaks that uptrend line, high candle count dot, reversal, and we actually have a false breakout at the same time on the weekly chart. MET, again a move up, attempt at a breakout, catches those who believe that breakout has to work. We reverse, get an FBO, false breakout signal, and we continue down at a resistance level also here on the weekly chart. What I do in our CTU courses is we not only look at signals, but we look at what the charts are doing both daily and weekly when these signals fire, and we look for high possibility trades where there's resistance areas also with these signals. We look at what the general market is doing as well. We look at whether there's high candle counts or not in association with these signals. We look for as many possibilities to line up our trade as possible for a high probability scenario for both long and short trades. CTU is about teaching education. It's not about a signal that is supposed to work each and every time. We learn about profit targets and loss targets associated with these signals as well. Now, in the TradeStation workspace that I've developed, there is what's called a radar screen. These signals that we've been discussing will fire in that radar screen. Green, L for long, S, red for short. Therefore, let me give you an example. HUM is an LO6. That simply means an FBO, a false breakout to the downside, fired 6 days ago. Another one fired about a month and a half ago, and you will see these listed LO6 6 days ago. They list them up to the last 10 days. You can see a there it was or green there it was or fired on HUM. Let's take a look at I believe we mentioned earlier, you can see ENDP also false breakout. CERN, we mentioned earlier in the video, is now firing a false breakout to the upside, and you can see that that is red SO3 fired 3 days ago. You can click on the there it was or signal here, and you can see where there it was or signals also fired green for bullish, red for bearish. NOV, you can see where we've had multiple there it was or signals fire and you can see the high candle count dots showing up on the weekly chart with these reversals. That's a green one, and so you can see how that works. Let's take a look at a SO4. That means a short. You can see that's down, red high candle count dots on the weekly, and we'll see how that one pans out. But that's how these fire in the radar screen. The radar screen is preloaded with over 600 stocks that meet certain criteria: high volume, optionable, and generally over $10 a share. These other columns have to do with the high candle count firing yellow, letting you know the risk is high, what we've been discussing here. You can see, for instance, with MYL, you got an L13. It's yellow, which means it's in a danger zone to go to the upside. We want to look for it to trade to the downside, and we should start getting signals for that. These other signals in here, the CH and CH and DCH, are for our trending signals, and that's for another video. If you've got any questions or comments, please contact me at david@crosshairs.com. You can go to my website and see if there are any offerings for Crosshairs Trading University and other opportunities to learn how to trade in the crosshairs. I'd love to hear from you and share with you a strategy to make money in the stock market. Thank you.